Guys, welcome back to another video at the Capital Traders Group. Now in this video I'm going to be in essence showing you guys a very simple strategy that I do use. Now in essence this strategy is based around ranges and liquidity in essence. Okay, there are a few mixture of other things, but in essence that's what the two things it uses, right? And key levels are a very important thing on the strategy. Now this strategy can be you can swing trade using this strategy, you can trade intraday, whichever trading style you have, this strategy does work. But for first thing first, you have to have a key understanding of your key levels. Now, first key levels are your your major support resistance zone or reversal points. Okay. Now, one thing you do realize in FX, now this is something more psychological. You will see a lot of price movements or reversals around key zones. Like so, for example, this is the 2.0 region key level. We saw a major reversal from that zone. Okay, we also saw it tap in more than once. Okay, this is also based around psychology. Traders or investors are humans, and they usually like round numbers, right? Round numbers are easier to remember. And yeah, so that's one of the main reasons why you want to keep an eye on or note major key zones that are around round psychological levels, as I like to call them. Now, so I'm going to mark out these regions, mainly majoritively around major support and resistance levels. So we have the 4.0 region, right? I'm going to get as close as a round number as I can. And then we have the extremities, which is the complete low of this row, which is, again, I'm going to keep close to as a round number as I can, right? 5.0. Now, this is on the 3-month time frame, just so you guys are aware. But one thing you'll realize, right? So there's different ways you can construct and use this strategy to your own example. Now, for example, some traders, which I've taught the strategy to, only like to trade the extremities of this range. Now, the main reason I like to do this as well from time to time is mainly because it increases the probability of a move to come. So for example, if you only trade the extremities of the range, which is the swing highs or the complete lows of a range, it increases the probability of a reversal or a big move to either come from either side of that. So for example, if we broke this zone, we would likely see a big flash push down before we saw a reversal, right? So trading around the extremities of a range can be very important and lucrative. So the second thing you'll realize is the midsection of this range has been retested numerous times. 1, 2, 3, 4, 5, 6, right? And this is very normal. You see on all sorts of ranges, on all time frames. Now you have to remember, price is fractal. So what you see on the 1 minute, you can also see replicated on the 1 hour, the 4 hour, the daily, the weekly, and the monthly, or even the quarterly, as we have in front of us right here. So what you'll see happen on the equilibrium is price always at least retest the equilibrium a number of times before looking for any sort of reversals. Now we saw basically a build up of liquidity. We had clean equal highs, right? We had clean equal highs above this region, but price wasn't ready to break above. So what did we see? We saw a push down below, and we saw a retest before price tried pushing up again, failed, came back, took that low, right? Which I'm going to go mention in a minute, took that low, and then we saw a reversal, then took care of the liquidity before we then saw a reversal down, which retested, gave us a small term reversal before again we came back down as sellers were ready to step in before we saw 2 more retests. So the equilibrium is a very also a very important zone you can take trades from, as price does like to retest the zone numerous times and give us volatile pushes either in the same direction or break clean through it. And when it does break through it, you can clearly see a couple retests where you can look for re-entries for price to continue on to the extremities of the range. So that's another way you could trade ranges, right? Keeping things very simple. Now, the way I like to use this strategy is, this is where liquidity comes in. Now we've mixed in psychology, we've mixed in ranges. Now we're going to move in liquidity. Now, before I show you guys what I'm going to be looking at on the ranges, what I'm going to be explaining is what price looks like fractally, right? When you see sort of reversals. Say we have a reference point, right? We have a point of reference or a point of interest zone, a order block, whatever you want to call it, right? An interest zone, you want to look, a supply demand region that you want to look for longs or shorts from. In this scenario, we're going to be looking for longs, right? Say this is a high time frame zone that we want to look for reversals from, for whatever reason, right? trade your strategy as you have tested. So in essence, say price is coming into this region. What do we see? We see price push up, and then we see some sort of, right, we saw a reversal from this zone. Now what you'll realize is, right, most of the time liquidity lows are swept before you see any sort of reversal. Now I don't, this isn't like what I mean when I see relative equal lows, right? You have a double bottom and then you can see something like that. That is a sort of a liquidity raid as well, but in essence this is a bit more subtle. But what you see is a low swept, right? A clear low swept, and then you see a push up in price, which then again took the high, which gives a more intent based move. And then this is where you could potentially be looking for longs from, right? This region here, because you've seen that the low was swept first, then the high was swept, giving intent, and then a retest you could look for. You could then look for an entry for long, because we've seen a clear reversal. So what in essence works with this strategy is you usually always see a low swept before in an interest zone before you see any sort of reversal. This happened on lower time frames and higher time frames. Also, another way you could trade this is the main zone you want confirmation for your bias, right? Once it trades above this high in this scenario, if say you miss that retracement zone for whatever reason, we all miss trades, it happens. What then I would then be doing is, once price break this low, because it increases the probability. I have taken trades like this before. Once price breaks that macro low, right, that external structure, then I'd be looking for price to trade above this region to then potentially look for longs on the lower time frames to target a higher time frame liquidity or whatever my target zone is. Okay, that's another way you can trade this region as well. Say if you miss a retracement after a lower swept, or price just didn't retrace far enough into your intra zone. Once that high is swept, increase the probability of the move, because price has already retraced on the lower time frames, for example. Okay, so that's one way you can trade it. Again, before you see a reversal, a low and a high is swept. Okay. Okay, so now we've gone through that. Let's go move back onto the chart. Now again, I don't want to make this video too long, so that's why I'm trying to speak fast. So you can watch this video back, please. Also guys, please, if you're liking this video and you're finding value, you're extracting any sort of value, please like and subscribe. It does support the channel and helps the channel grow as well, so that's very much appreciated. So now again, let's test this theory. So what do we see here? Right, we have a high, right? We have a high, and then what does price do? Liquefies that high, and then we see a reversal. Okay, again, same thing here. Even let's look at here. We see a low, price takes that low, then we see a reversal to the upside. Again, what do we see here? We see a low, then you see a clear reversal. Again, this is on a 3-month, this is on a monthly time frame. But once you can identify these things on a higher time frame, you can always scope down the lower time frames and start looking for potential longs. Because look, even in this range bound movement, right? That alone is a 3,500 pip movement. So there is a lot of opportunity to make money from understanding these ranges on a macro perspective and then applying it on lower time frames. Again, let's carry on. What do we see here? We see this high get swept, right? Which is sort of the extremity of this micro range we have here, right? But I'm not going to get too deep in that because price is fractal, as I mentioned before. High swept, and then we see continuation in bearish momentum, right? Very, very simple, right? Now, let's look at, okay, yeah, even this one, sorry, I forgot to mention, have this low. So this actually offered a very, very nice buying opportunity that I did take with the members last year, where the 1985 low was swept, and then we took longs on GBP USD. I also bought a lot of GBP. I converted from my crypto portfolio my USD to GBP, which was a nice gain, as it did offer I believe about 17%, 18% gain just by holding current fiat currency, which was very, very nice, rather than holding the dollar. But so yeah, you can very easily see the example of this on the high time frame, right? You see price takes a low, and then we see a reversal. Again, this is in the the equilibrium of the range, so this is a very good area to take positions from, right? Again, mixing these concepts in on the high and lower time frames can be very, very effective, as increase the probability of setups hitting, you know, your actual targets and being valid. Okay, again, these are also psychological regions, as they are all round numbers, which is also an important factor to keep in mind. Okay, so now let's say we're pushing out on the low time frame. Let's go on the weekly because we're on the 3 month now. Now let's push price back a bit because I want to see what goes on here. Now let's investigate a little further. Sorry. Uh, right, what do we see here? After we saw that big liquidation, right, at the low here, what do we see? We saw a big reversal. Now again, depending on how you trade, you could have easily looked for lower time frame entries on the 1 hour, 4 hour. Again, however you trade, um, um, depending on your entry protocols of your system. So that's how I would look for buys. But now let's say you missed the buys. Now, what does price do here? We see these clear highs before this low was made. What do we see? We see a clear liquefied, right? These highs were clearly liquefied. All 1, 2, 3, 4, 5. This is a lot of liquidity. This is the weekly time frame. What do we see? We see a big candle push down and wick down below. So now I understand there is a very nice probability of price to come down lower. Now, where I would be looking for potential targets for this potential short that we see coming up, I look for here. Why? Mainly because we have a big imbalance zone, and price could this is the last prominent zone before price broke structure or liquefied those previous highs. So that's where a potential target I'd look for, and potential reversal zone I'd look for in the future. So now let's push down on the lower time frame, on the daily, right? Again, keeping your macro structure and time frames intact is very, very important. So what do we see? We see these highs get swept, and then we see an impulse down. Let's see if price continues. Again, what does price do? It breaks this lower structure on the low, right? It gives us a breaker structure to the lows. Right, I'm gonna speed up because the video is getting a little long. It gives us a structure of the lows. Again, this is also liquidity being swept before we see a retracement. Now, with this strategy, what I want to be looking for is, if we're going to see a reversal, I want to see price wick above this region. Sorry, wick above this region, and then trading below it for start looking for shorts, okay, in this zone. Now, this is on the daily time frame, so let's say I'm swing trading this position. Again, I want to keep a close eye on this zone, okay, that high to get swept in order for me to look for short. Because look, once that high gets swept, what is it going to do in terms of manipulation? It's going to entice buyers into the market thinking price is going to ready to push up higher. The only way I'd be okay with looking for buyers if price is readily accepting that zone. But if it just deviates above and then starts trading below, that increases the probability of another bearish push to come. Again, once the high is swept, we're going to see are likely to see a reversal from the zone. Okay, let's see what price is going to do. Right, what do we see? We see a clear wick up. Okay, now what I want to be looking for is, I'm going to be looking for shorts if we start trading below this region. Okay, now if I scope quickly, let's go back to the monthly time frame, because we also need to understand where we are in terms of structure. We are still at near the extremities of the low. We're not at the extreme lows, but we're at the mid section, the equilibrium of this range in particular. So we know, again, price is fractal, so we're at the equilibrium of this range. So we do know we're likely going to see some sort of big push from this region. Again, price likes to retest the equilibrium of ranges, okay, as I've mentioned before. So we're likely going to see some sort of reaction. So I want to see, again, price starting to trade below these regions before looking for shorts, okay, because it's going to offer strong volume in the market. So what do? I wait. And what does price do? It offers a big push down. So now what I want to be looking for is potential retests of this region, right? A potential retest of the zone for looking to come for price to potentially come down lower here, to potentially target even this region, or potentially take liquidity from this low before we see any sort of reversals on the higher time frames. Okay, so again, let's see how price plays. Again, we have a perfect retest of that structure point. So again, say you missed this region, I'd in essence be looking to target potential this zone, mainly because there's a bit of an imbalance at this region. Again, there's a lot more lower time frame structure that I do want to go through, but I don't want to make this video an hour long. So in essence, I'd be looking for this region mainly because after it retested, it left a big imbalance zone on the daily time frame. So we're likely to come back and retest this zone at some point in the future. So I could potentially leave a limit order here. Again, depending on how you trade, it's completely up to you. You could leave a limit order here for a position here, or you can potentially even target the wick high to potentially come down to the wick close. All right, again, depending on your strategy, I'd target this low mainly because we're likely going to see some sort of reversal before we see any sort of continuation in price. So again, right, we've seen continuation in price. Price retested that zone, and then we pushed down lower. So it's likely in the future we're going to see one or two things come. So this low hasn't come in intact just yet, but what I will be doing is leaving this, leaving that zone valid, right? Leave a limit order here, and then look for these lows to now get swept, right? Liquidity is being built here. So what's the best thing to happen to increase the probability of this move is, again, wait for some sort of reversal after the low is swept, some deviation to trade back above that region to potentially look for longs into this region to then potentially look for shorts back down, okay? Again, this strategy is basically based off highs and lows getting swept, okay, and understanding ranges and extremities of each ranges, okay? Again, after this high was swept, we saw a reversal. You could have, after the low was swept, we saw a push down, impulse push down, and then we saw a retest. You could have entered on the retest. Again, even if you missed it, you would have entered on the imbalance fill of this wick, which will likely still happen. But again, now say you missed that zone, what I'd be looking for potentially tomorrow is a wick down below, even potentially a wick down below here, deviation above, and then look for longs within this region to trade back above that range. Okay, so this strategy does work very, very well on all time frames. I just went through GBP USD. Haven't looked at this previous price action data on this pair, but I just want to give you guys a raw outlook of this strategy and hope you guys basically found it useful. Again, if you did extract any value from it, please do leave a like and subscribe. But again, this strategy is based around psychological round numbers, ranges, the extremity of ranges, and liquidity. Okay, so once you understand that, you can trade this. You could trade this strategy or look for positions from these specific area points, depending on your entry protocols. Again, that it comes down to your own system. But this is a very, very simple strategy that any beginner can use in the market. But you do have to test it a few times once you really start getting the hang of it. Again, practice does make perfect. So with all that said and done, I'll see you guys on the next one. Like, subscribe, do all the good stuff. Bye bye.